Welcome back to Market on Close. I'm Marley, Kayden here in Chicago alongside Sam Vadas at the New York Stock Exchange. We'll close out our show this Friday with some final thoughts on this week's performance as well as today's session. For me, gold, of course, this rush to gold continued with prices touching record highs above 4,300 for the first time ever. Gold had its best week in 17 years, its best performance since September of 2008 this week, with prices up almost 7%. Since the start of the year, gold futures have risen nearly 60% to end today's session at 42.35. For some perspective, at the beginning of the year in January, gold prices sat at about $2,670. Then in crypto, we're closing out a week that erased hundreds of billions in digital asset value. The total value of the crypto market shrank by more than $600 billion since last Friday's crypto flash crash. Bitcoin, which is often referred to as the digital gold, continued to slide, did not hold up against gold's narrative, dropping to its lowest level we've seen since June. Bitcoin set an all-time high of 126,000 plus on October 6th, but ended the trading day today at about 106,000. Ether, the second largest token, has now retreated more than 20% from its August peak. Sam, those were just a few of the big stories that caught my eye the most today and this week. How about for you?
Keeping my eye on the flurry of diplomacy this week, Marley, and obviously today we had Trump meeting with Ukrainian President Volodymyr Zelensky, and he says, that is Zelensky, that he's had meetings with U.S. energy companies that want to help after Ukraine's infrastructure has been targeted. So we're going to be waiting to see more details about that, and certainly what that's going to mean as far as the effects on the energy complex. But the move in ORCL today was also fascinating, lower, down 7% almost, despite a number of those price target boosts. A number of analysts walking away from the company's AI World event this week, which we've been keeping across, feeling positive and encouraged by its better than expected guidance on revenue and EPS. TD Cowen, Guggenheim and Barclays all raising their price targets now to $400. But we were talking about this one this morning, Marley. The Bank of America saying that what is less clear here is how ORCL can stand up data centers fast enough to achieve the top line growth, given some of the supply constraints across land, building, energies, and GPUs, I should say. So, energy has become a very big part of this story, and whether that poses a risk to this enormous build out that many of these companies are talking about. So we'll have to wait and see on that one.
Yeah, as we close out this week and head into next week, in focus for next week, of course, we've been talking about it, earnings season in full swing. Several big names reporting. Elon Musk's Tesla will kick off Mag 7 earnings for us. This on the back of reporting their record deliveries for the third quarter. We're also going to hear from streaming giant Netflix. They'll be releasing their earnings. That's on Wednesday, with the company expected to report another quarter of strong results. We're also going to hear from chipmaker Intel as the company pushes forward with its turnaround strategy. Lots of eyes and ears will be on that one, particularly on the call. I think all three of those reports have the potential to power some major market moves. In addition, we're going to hear from the majority of the rest of the airlines. Several major car makers, our big major aerospace and defense companies, Northrop, Lockheed, Raytheon, KG also mentioning we're going to hear from Coca-Cola. So lots of big potential catalysts next week. How about for you, Sam? What will you be keeping an eye on? I know earnings is one of the things.
Oh, absolutely, and going to be keeping us on our toes. So thank you so much for running across some of those names that we'll be keeping our eyes peeled for. But we'll also be getting that delayed CPI report, switching from the micro to the macro, Marley, hopefully next week. This is expected to come out on Friday now, and this will be one of the few government data prints that's actually been released since the government shut down. This is important because it'll come just days ahead of the next Fed meeting. Now, the Fed has put an emphasis on downside risk to the labor market over the upside risk to inflation. But of course, many are monitoring price pressures right now as they are also weighing on consumers. So there is an expectation that it will come in at around 3.1%. All eyes on whether tariffs are boosting the price of goods, while softer service sector and housing inflation is expected to keep prices in check. So we'll be watching. I'll also be keeping an eye on the ongoing US-China developments. It's a critical week for China as well, with the release of its quarterly GDP numbers and a big policy setting meeting known as the Fourth Plenum, which is closely watched by investors to really understand how China is thinking about mapping out the next 5 years, particularly around consumption and technology. Marley.
Well, thanks so much, Sam. That Fed meeting, of course, kicking off October 28th, but that's going to do it for us this Friday on Market on Close.